Hello and welcome to Exploring the Crypto Risk Curve. So 2 videos ago, we looked at portfolio planning and the types of things that you need to take into account when trying to plan your portfolio correctly. In the previous video, we just looked at moving out the risk curve, what you should look at when considering that. What is it you're trying to look from? What is your upside? Are you looking for, a 50% gain or a 2x, a 5x, a 10x? What is your risk profile in order to try and achieve that? And then with that, what areas of crypto could you look at? Today, we're going to go more specifically into certain chains, starting with the base case in Bitcoin, Ethereum, using those as a base case and then deciding if you want to go further out the risk scale, how can you do that? So by going into other chains, for example, like Solana, Base and others, but also then if you want to go even further out, you can look at the likes of DeFi projects within each one of those chains. And so to do that, we're going to look at those projects, look at the potential risks there, what's the potential upside, and then how you can try to navigate and choose which areas you should go into in order to build out your portfolio in a structured manner that fits your risk profile, but also fits the potential upside that you're looking to achieve while investing into cryptocurrency. So to do that, we'll start with Bitcoin. Everyone knows Bitcoin. Within, the hugely risky space that crypto is, Bitcoin is seen as the safest. It's the original. It's the oldest. It's primarily seen as a store of value. Of course, it's got a long track record, very high security, and very high adoption. And we can see now the ETFs in Bitcoin, which opens the door to institutional investment, are absolutely bringing in huge amounts of money now. Over 20 billion has come into the Bitcoin ETFs. So massive institutional adoption. Some would say, though, that Bitcoin itself is limited beyond the store of value and payments. And that would be big payments. So the risk profile, low risk, but limited utility for DeFi. Pros, very strong security, and as already mentioned, institutional adoption. Cons, lack of smart contract functionality and limited scalability. But certainly, if you're looking for the safe haven within the crypto space, Bitcoin's your place to look at. Then, of course, there's Ethereum, which would be seen as the king of the smart contract space. The first, and creating the foundation for DeFi, and the vast majority of DeFi projects have built on Ethereum, while others are now moving into that space. Ethereum is most certainly the king of that space. So they've got an extensive DeFi ecosystem, and it is developer friendly because it has been built that way, and the vast majority of builders that started in smart contracts have done that, of course, on the Ethereum platform. The upgrades, they're underway. They're always trying to improve their scalability, trying to reduce costs and so on. But from a risk profile point of view, you would consider it moderate risk, certainly slightly more risky than Bitcoin, but not much. But certainly reasonable upside still. But a lot of it has been taken up over the years. They have had scaling issues. So their pros, certainly secure, very widely adopted, a very large DeFi ecosystem, or the largest ecosystem that's there right now for sure. Cons, seen as having high transaction costs and slow upgrades. So it takes them many months to bring out their upgrades. Now, it has to be said, the upgrades they've done, particularly the more recent ones, have been hugely successful, and there's another one coming in December. Many would argue that Ethereum have high transaction costs, and certainly they're higher than the competition out there, but they have been actively working on bringing those down. So certainly, if you're investing in the crypto space, you should certainly be looking at Ethereum and the DeFi space within that, depending on how far out the risk curve you're comfortable in going. And then, of course, as we said, there's other chains out there, and the likes of Solana is very much putting itself forward as the high performance and fast transactions, low cost, project and chain that's allowing DeFi development within that space. And they are certainly starting to get traction. They've got a strong ecosystem. There's a lot of DeFi starting to be built on Solana now. And there's plenty of venture capital support out there too. Of course, meme coins has been, very strong in the last number of months, and specifically this year. And an awful lot of those meme coins have been built on Solana because they're fast and cheap. And this of course brings a lot of use case and a lot of users onto the Solana chain, which of course is beneficial to it. This is beneficial to its token and of course to the DeFi projects within that. So it certainly would be seen as higher risk. There is definitely lots of question marks around it not being as decentralized as a lot of people within crypto would like. Pros: fast, low cost transactions, and a very active developer community. Cons: reliability issues. So a number of years ago, the chain actually went down quite a few times. Last year, I think it was 3 or 4 times, and this year probably just once. Of course, it's something they're working on, they're improving on, but for a chain to go down, it does not have a good look. And so this is something they certainly have to continue to improve on. And realistically, it cannot be going down any longer. And then, limited decentralization. Like I said, many people would see the Solana ecosystem, or particularly Solana itself, as being quite centralized. And again, for the vast majority in the crypto space, they like to see a more decentralized model than we have with Solana. Another one to look at is Base. Now, Base is interesting in that it is creating a platform that is faster and cheaper than Ethereum, but they're actually built on the Ethereum rails. Now, why would they do that? Well, first of all, because Ethereum is usually secure. It's proven that over the years, and they've got this a very high network effect. There's a lot of people are drawn towards the overall Ethereum ecosystem. And so by building on top of Ethereum, Base have taken all the positives of Ethereum in its security and its network effects, but then they're bringing, a platform that's faster and cheaper, but also bringing the Coinbase user base into this, as, Base is very heavily backed by Coinbase. The cons, again, very much centralization concerns here, and of course it is an earlier or younger ecosystem, and so with that carries a little bit higher risk, but of course that in turn brings the potential. And so this is certainly a chain, and the DeFi structure that's built on it is very much having a strong look at it. And so then if you go into, making some comparisons on these different projects, so you can see the different types of DeFi projects on each one of those. These are just mentioning a few. There are so many more, but this is something we'll look at in more depth in following videos. But in the likes of Ethereum, some of the top projects, so the top DEX on Ethereum is Uniswap, and Uniswap isn't just the top DEX on Ethereum, it is the king of DEXs, certainly at the moment. Of course, there's plenty of competition coming, but it has done extraordinarily well over the years. Aave is a lending protocol on Ethereum and has also done really well. Again, there are others, the likes of Compound and others, but again, it has done really well and is very strong in the market, makes really good money. MakerDAO is one of the stable coins on this protocol. The strengths for Ethereum is they've got that very deep liquidity, very secure, as we've said, a very large user base. Challenges, higher transactions costs, but this is something they're actively engaging in trying to reduce, and are doing that quite successfully with the upgrades that they're bringing to the fore, though they do seem to take quite a long time to bring. And then, like we said, Solana is the sort of faster, cheaper version. There's some good projects in the DeFi space within Solana. The likes of Ethereum is a DEX. It's a low cap DEX. It's probably very far out the high risk curve, but the potential upside, of course, if it goes well, is really strong. You've the likes of Radium, which is again where the vast majority of transactions home back to, and we're going to look into other Solana DEXs and other DeFi protocols over the coming videos. Some really interesting projects on there that could be worth having a look at. Again, depending on how far out the risk curve you want to go, there's some really strong potential upside with those. Again, the strengths here: low fees, fast transactions, and look, there's been those stability issues, but again, I think they're mitigating those issues as we move along. The decentralization, that's something they're going to have to address, I believe, if they really want to, grow to the size and scale of the likes of Ethereum and beyond. And then base, again, the DEXs that are mentioned on here and the lending protocols and so on, the likes of Uniswap, Compound, and Balancer, they've all been ones that were being created on Ethereum and now are available to Base as well because they've built on the Ethereum rails. But there are other projects that might be even more interesting that have been specifically built on Base. And I think the upside there could be really strong if you're happy with the additional risk that you would be taking in that situation. But again, we've got the fact that its strengths, lower fees than Ethereum. It's based on the Ethereum security, so really strong. It's a smaller ecosystem, so that's where the challenges come in. But again, I think that will build over time as Base brings its Coinbase user base into Base, and I think that has real strong upside potentials. Other chains that you can look at, and of course there's many more besides these, but the likes of Avalanche, they've got a strong DEX, and the likes of Trader Joe, a lending platform in Binky, really good projects. Other projects also on Avalanche, and again, if Avalanche does well, and of course that's a big if, then the potential for these projects to do well, is really large. But can Avalanche bring that user base in so that there is that expansion of use of the likes of the DEX and the lending protocols and so on? And the answer could be seen in they're very much aiming now towards the gaming market, and a lot of people believe that the real influx into the crypto space will come through gaming. If Avalanche can really, bed itself in as one of the leading chains for gaming, well then it's highly likely their DEXs and lending protocols, etc., will do well too. So that's again where you do your research, you make your decision on that, and if you believe Avalanche will be a good chain, well, potentially you might want to buy into that token, and if you want to go further out the risk scale, then you could buy into their DEXs and lending protocols and so on. So they're the opportunities that are out there. Of course, the challenge with the likes of Avalanche is it's newer than Ethereum, as every other DeFi space is, and it's a smaller ecosystem. So can they bring in that adoption? Then you look at the likes of Binance Smart Chain. Of course, this is backed by Binance, which of course gives us a certain amount of advantage. And it, I suppose, was the first alternative to come out versus Ethereum. So when Ethereum's DEX was doing incredibly well and its lending protocols were doing incredibly well, it was slow, it was expensive, and a lot of people were looking for an alternative. When Binance Smart Chain came out and brought out the likes of PancakeSwap as their DEX and the Venus's lending protocol, I was fortunate enough to see those at those time and managed to, invest into them when they were at very low prices. Had done the research, could see the opportunity, and particularly with Venus, the lending protocol, not only were they faster and cheaper, but they also gave access to being able to borrow against your Bitcoin, your Litecoin, your Ripple, all these projects that weren't EVM compatible and so weren't available on the likes of Aave, you could use your value in those cryptocurrencies and borrow against them on the likes of Venus. And this was another key factor why I invested at that time. That was an investment that worked out really well. Why am I saying all of this? Because if you can find the projects ahead of the general market, you do the research and you truly believe in them, then by investing in them, you put yourself in a really good position to make outsized returns. And for people that are going out further out the risk scale, that's what you're looking for. And so again, low fees, broad retail adoption, they did really well in that space. Some had some security issues with them, and again, the centralization question, which keeps rising in many of these projects. If you're happy enough with the projects being heavily centralized, then most of these projects, have very little downside once you're sure that they can bring in the adoption. Of course, can Binance Smart Chain bring in adoption when they have the likes of the biggest exchange in the world in Binance? You would imagine so. So there's plenty of opportunities out there. And of course, within each one of those, which in each of these chains, there's more areas of DeFi within each chain to look at. But then there's more areas within each chain to look at, like real world assets and DPEN, the centralized physical infrastructure, there's gaming, there's metaverse. There's so many other areas within each chain, depending on how far out the risk scale you want to go. And so all I'm trying to do here is, I suppose, give you some ideas as to what's the base case. If you're comfortable going outside that base case, how far out do you want to go? You can invest in the actual chains themselves, or, that takes you further out the risk profile. And maybe to put some context into that. If Bitcoin, and some people believe that Bitcoin can go to sort of 200,000 or thereabouts in this run, roughly a 3x from here. If that were to happen, again, most people would believe that, for example, if Ethereum continues to be successful and continues to move on from where it is, then that could potentially do a 4 to 6x, as an example. If Bitcoin was to do a 3x, then maybe this can do a 4 to 6x, which of course sort of leverages your investment if you decide to move outside of Bitcoin to Ethereum. Likewise, if you were to go from Ethereum into the likes of Solana or Base or others, if you were to buy into those tokens, the likelihood is that the likes of Solana might do a 5 to 10x. Likewise with Base, or maybe even more. Of course, there's one slight catch with Base. You can't buy its token because there is no token. You can only buy its stock. But of course, then in any of those chains, whether it's Ethereum, if you believe in Ethereum, or Solana, or Base, or Avalanche, or others, if you want to go further out the risk scale, you can simply buy into a DeFi project within that space, or any of the other areas within that space. And so that's how you can look at expanding out your risk profile if that's what you want to do. So, choosing DeFi platforms is based on your risk appetite. I sort of covered it. You can go into the chains, or you can go into the DeFi projects underneath it, or all these other areas within crypto. And so an outlook and what to consider. So you might want to look at what trends are out there. So cross-chain DeFi protocols improve interoperability. So is there DeFi, like as an example, Uniswap isn't just available on Ethereum now. It's available on every chain that's built on top of Ethereum, and it continues to expand beyond that. And so that, I suppose, mitigates a certain amount of risk, but it also gives you benefit going across chain by investing in just one DEX. But then you have to look at, is a lot of the upside already gone in Uniswap? Again, if you might do your research and decide that actually no, there's a huge amount of upside left in it, or at least enough for you to park some of your investment in there. And again, these are all the decisions you need to look at as you fill out your portfolio and what you want to go for. Then there's the layer 2 scaling advancements from Ethereum, and we spoke about Base. There's many others on there too, like Optimism, Arbitrum, and so many more. And then there's the increasing institutional interest, and this is worth looking at, because as institutional interest comes into the crypto space, where are they going to put their funds? Because obviously that, if you have very large money coming into certain areas within crypto, and if you can get in ahead of that, that gives you a huge advantage. So as an example, we've seen that Bitcoin has moved hugely, and with all this additional money coming in from institutional investors, you would expect that there's going to be a significant push to the upside in the near future. Will some of that money flow down into other areas within crypto? A lot of people believe, for example, institutional investors might go into areas of real-world assets because they have a strong understanding of that. And as it becomes more accessible to them, a lot of money could funnel into there. You've seen the likes of Larry Fink of BlackRock, with 10 trillion under management. They've speak very highly, and he has spoken, saying that literally every asset in the world is likely to be tokenized. So this is a huge opportunity. They see it as a huge opportunity. It's likely they'll start to move money towards those projects. If you can find good projects in that space before they start to invest in those, then the upside potential is very, very, very large. So again, it's about doing that research and finding the right projects. Of course, risks to pretty much any project out there is the regulatory risk. So if you're going to invest into a project, I'd strongly suggest that you look and see, has that project put itself in a strong position to be acceptable to the regulators as time moves on? Because if they're not, there's a chance some of these projects could actually go away. Or at least have their value heavily reduced if they're not well positioned for regulation. And particularly in the DeFi space, real world assets, any of those projects, they're going to have to be well positioned if they want to be able to accept in the likes of institutional investment. But I believe most investors now will start looking into seeing if they're properly structured to be well positioned for regulation in the future. And then there's the reliability of projects, the centralization risk, and especially for newer networks as well, are they going to be able to get an adoption? So there's many risk factors you want to have a look at. There's those and many more. So I guess what I wanted to try and cover in this is, so using Bitcoin and Ethereum as the base case, and if you want to go outside that risk curve, where can you look? You can look to other chains, and you can look to other types of projects within those chains, whether it's DeFi, real world assets, gaming, metaverse, and so on. I sort of honed in on a DeFi here just to give people a sort of a general concept of how you can go about looking at that. But in the following videos, I'm actually going to go into chain by chain, and within each chain, I'm going to go into each area, pull up some projects that I believe could be interesting, give some idea of the risks involved with those, but also the potential upside. And if we can see, I'm trying to go to, I suppose, give you direction as to what you can look at, so that you can start to build out your own portfolio, but build it with your own knowledge. It's great to have a little bit of direction, but you then yourself need to get your own conviction, because the market is built to shake you out of your positions. And if you don't have your own conviction, if it's just something you heard somebody else say, there's a good likelihood you'll get shaken out of your position before the upside. And that's when you lose out on those gains. So again, follow who you need to follow. Listen to what they have to say, but ultimately do some of your own research, get your own convictions, make those investments, have a diversified portfolio, ideally across chain and across areas within those chains. And then that positions yourself in a position where you're mitigating the risk, less chance of losing money, and a really high chance of making very significant gains. That's what it's all about. Hope you found this video useful. Watch out for the next ones. Talk to you soon.